Howdy there, folks. Welcome into the reaction channel. One video only for me to react to in this one. The Meta CFO went on CNBC here today, and I heard about this last night, and I was like, I want to make sure I record this, so I'm about to watch this with you guys. I haven't even seen it yet. I'm looking really forward to getting into this, kind of reacting to it, kind of giving my opinion. This is the first time the Meta CFO has made an appearance on CNBC for an interview like this since she's taken over the role. So yeah, I'm looking forward to getting into this one. Thanks to everybody that subscribed to the channel. New all-time high in the history of the channel for subscribers. I appreciate y'all being here. And also tomorrow I'm making moves. I'm buying stocks inside the Patreon portfolio, so make sure you join in there. That's gonna be pinned comment down there. It's 19 bucks, and what you get being part of that, which is why you want to get in there for 19 bucks, is a steal deal. You get to see the moves I'm making each week, what stocks I'm buying and selling, the portfolio in total is through Fidelity Investments. You get to be part of that Discord chat that's for the Patreon, and on top of that, you get a chance to win a free membership inside my private stock group, which is an incredible value each and every month. So yeah, definitely get in there. That's pinned comment down there. Plus you get to support the channel for 19 bucks. Like, come on, man, it is nothing better you're going to spend 19 bucks on in this world than that. So appreciate you guys joining me. Let's get into this.
Morgan, for example, has a year-end target now that's 425, saying that despite ramped up costs, there is still...
JP Morgan, remember what I told you guys? I said, I wouldn't be surprised at all if Meta ends the year, assuming the market's just decent, at $400 to $500 a share. And look at JP Morgan now is raising price target to 425.
Upside to come. Needham's Laura Martin, less sure, retaining her underperform rating, saying that until those investments become accretive, if ever, stay away. Our Julia Borsten joins us now. She has a special guest to answer some of those questions, and I'm sure plenty more. Take it away, Julia.
Thanks so much, David. That's right. I'm joined now by Meta CFO Susan Li in a first on CNBC interview. And Susan, in fact, this is your first TV interview since you've taken on the role. Thanks for joining us today.
Thank you so much for having me, Julia. It's really great to be here today with you and your viewers.
So, Susan, we just heard from David some of the various ways that Meta outperformed expectations, also guiding to better than expected results in the third quarter. Other than just the ad market, what's behind this upside surprise?
Yeah, I mean, if you don't mind, I really think there are three big takeaways for us from the Q2 earnings. First, as you mentioned, it was just a really strong quarter across all of our user and engagement metrics. We obviously saw a re-acceleration in ad revenue. That's in part driven by the fact that we've seen the broader macroeconomic landscape stabilize, especially after a really volatile, last 12, 18 months. The second is I think we're really seeing our year.
So numbers here, look at these numbers, okay? So obviously they beat on EPS, they beat on revenue, they beat on daily active users, they beat on monthly active users, and they beat on average revenue per user. That's incredible. But the more important number than all those was they beat substantially on guidance in terms of what the company's expecting to have coming in for revenue for next quarter versus what the analyst community is expecting. So that was the most impressive beat of them all.
Efficiency work pay off for us and put us in a position going forward where we have a better cost structure that's going to enable us to deliver solid consolidated results going forward. And then more importantly, enable us to move more quickly and nimbly and just build more products and ship faster to all of the people who use our experiences. The third thing I just wanted to call out is there are a lot of places we're still looking to invest in 2024.
Look at that cash from operations up 42%. Look at free cash flow. Oh my gosh. Free cash flow of 146 flipping flapjacking percent.
I talked about that on the call yesterday, and that includes, our investments in AI, which are going to flow through our infrastructure costs. That includes hiring top-tier technical talent as we pivot our workforce to being more technical. And then, of course, our investments in Reality Labs and the metaverse over the long term.
Well, Susan, I want to dig more into these expenses and some areas where you're investing, as well as this year of efficiency. But first, I think we should dig in a little bit more into the ad market. There's been so much concern about an ad winter. It looks like you see things turning around and growth accelerating, but you are lapping some very easy comps with the year ago period. What are you seeing more broadly in the ad market right now?
And by the way, the ad market's very important for more than just Meta. So even if you don't own Meta, if you own stocks like Amazon advertising business is actually substantial now, so that's really important. If you own a stock like Google, obviously, super important, right? Even some small cap stocks like a Fubo, for instance, what I'm watching this on right now, right, that I recorded this program on, even Fubo, the advertising market's going to be huge for them over the next 5-10 years. And they're just have like an infant business they're building out there on the advertising side. So whatever's going on in the advertising market, it has long reach way beyond just Meta, and it goes on to what's going on in the actual underlying economy as well.
Yeah, that's definitely the case, that we are in some ways set up for an easier comparison because of the deceleration of the ads business last year. I'll say what we're seeing right now, though, is, we've certainly seen stabilization in the digital ads market in the beginning of this year. We're seeing some of the verticals that we're particularly exposed to, like e-commerce, retail, CPG, gaming. We're seeing strength in some of those verticals. So we feel like that's promising and we're optimistic, but there's a wide range of possible outcomes. If anything, I've been humbled by all of the big fluctuations in ad demand that we've seen over the last 12, 24 months. And, I recognize that there is a lot of uncertainty in the future.
You talked quite a bit on the call yesterday about the investment you're making in AI infrastructure. Explain to us how that's going to actually impact the top line. We heard from Mark Zuckerberg about your open source Llama program, your partnership with Microsoft, and he said that is not going to boost top line revenue. So just clarify for us some of these investments that will impact either the advertiser or consumer experience.
Yeah, so we've been investing in AI for a long time. A lot of our core AI work has been powering our recommendations work, our ranking work, the discovery engine that we've talked about. And that's driven both engagement growth for us. We talked a lot on the call about how we're seeing real growth now, and incremental growth in particular come from recommendations of content from accounts that you didn't initially follow. So that's been a meaningful driver for us in both Facebook and Instagram. And then, of course, on the ad side, where we've been investing for a long time in making our ad systems more performant, more measurable to increase ROI for advertisers. We also are now investing in Gen AI work. And this is a place where we really feel like there's an opportunity for us to make and bring even more memorable experiences, I think, to people who use our products in terms of the organic content experience. And then also, of course, to help businesses communicate quickly and more easily with their customers. So we're pretty excited about both those things. But obviously, the Gen AI work is much newer, and we don't expect, that there's going to be meaningful revenue impact in the very near future. But it's just very early, and it's a really compelling opportunity.
Yeah, and I understand that this is an area that requires quite a bit of investment, which is a good opportunity to pivot to this conversation about the year of efficiency and yet this talk about growing costs. In this year of efficiency, you just increased your estimates for how much your costs are going to increase this year. And then also there's an outlook for more spending next year. What is behind this? And how do you reconcile these two pressures to cut costs and also invest?
Yeah, so, I'd say the year of efficiency work, we had a lot of really hard decisions that we've made over the course of the last 12 months, and it's been a challenging time for the company. But it's put us really in a place going forward where, again, we feel like we're going to operate quickly and more nimbly, and it'll give us a better cost structure as we plan ahead.
So there the numbers are that I was talking about earlier to you guys, okay? That matters meaningfully. Look at Q3 forward guidance, 32 to 34.5 billion. So that's 33.25 billion at the midpoint versus analysts were at 33.22. So we're talking about $2 billion ahead of what analysts thought for next quarter. So if Q3 is like that, then guess what? Q4 is probably going to be a huge beat versus what analysts were expecting as well, which means analysts need to bring up all their numbers. And if you've got much better revenue numbers, right, with, let's say, expenses that are roughly in line, they changed it a little bit, but I mean, they're roughly in line with kind of where they were at before. It's just a little bit more of a narrow range. I mean, you could definitely be looking at a situation where the company is more profitable on the EPS side than a lot of folks anticipated for the back half of this year, which means the company's trading at a much lower valuation than what people assumed. So you can make an argument that Meta stock is cheaper today, even though the stock's up significantly, right? 5% or so. You make an argument that it's cheaper today than it was yesterday, based upon the fact that no one really expected them to have this sort of revenue growth, and now they're coming in with those sorts of numbers, right? So that's, I think, really, really intriguing. CapEx, 27 to 30 billion versus 30 to 33 was kind of the prior. So if anything, that's a little under there.
You mentioned that we raised our expense guidance for the year. That's really driven by some legal expenses that we took this quarter, and that really flowed through the rest of the year. But in general, I think we feel quite good about the work that we've done to position ourselves, I think, more nimbly going forward. Having said that, as we look into 2024, there are places where we're going to want to invest because of the opportunities ahead of us. And so those include the infrastructure work that's needed to build out the GPU capacity that we need in order to power our AI work, both in the core AI ranking recommendations work and also in the new Gen AI experiences. We're evolving our workforce to be a more technical mix over time, and that's going to flow into our payroll costs. And then, of course, over the long term, we have a really ambitious vision for Reality Labs and for the metaverse. And so that's something that we anticipate we'll be investing more in also.
Yes, of course, there's been a lot of attention to your growing losses in that Metaverse Reality Labs division. Mark Zuckerberg said, quote, "I can't guarantee you that I'm going to be right about this bet." And he talked about how this is really a long-term bet on the metaverse. How do you address concerns that the company is pouring too much money into something that's still a long-term bet with an unclear payoff when it comes to the metaverse?
You know, I would echo Mark's comments yesterday on the call on this. It is really a long time horizon investment for us. It's a very broad portfolio. There's obviously the VR work that we've done so far with the Quest and the Quest 2 headsets. Mark talked about how we're really excited for the launch of Quest 3 later this year. We already have a mixed reality headset, Quest Pro, out there, but this is going to be the first time that we bring it to a broad audience at a more accessible price point. And that's going to bring a lot of new and I hope exciting and compelling experience for customers to the market. And then there's a lot in the work that we're doing to develop augmented reality experiences too. We think mixed reality is going to be a good introduction into that. But a lot of the AR work does involve fundamental research to make sure that we unlock the technical problems we need to solve to bring those technologies to life. It's a very broad portfolio over a very long-term time horizon, and it reflects a really ambitious vision that we have to really build towards the next computing platform that we think is going to transform the way people interact with their environments and themselves.
But Susan, looking at the loss.
So the great thing about the metaverse spend here, okay, this is something that could be a potential massive upside catalyst. And the reason being is almost everybody on Wall Street, I mean, honestly, pretty much everybody on Wall Street. Matter of fact, I don't know anybody that's not. Everybody on Wall Street is basically saying this is just a loss. They're looking at this as just this company spending all this money. They're never going to get a payoff from this. No one's, running numbers that anything's going to be positive here. They're just running numbers that, the company's spending $1 billion+ a month on this and they're losing a fortune. So what that means, if Meta is able to start bringing down the losses over the coming years, like let's say Quest 3 is a big hit, which I think it definitely has potential to be. Let's say they get a lot of people signing up for subscription plans for Meta's Plus product now at this point in time, right? For the Quest 3. And they continue to build and, there's Quest 4 is a huge success in a few years whenever that launches, right? Quest 3, I think, has probably at least 2 to 4 years of major kind of scale out that can happen there. And so then down the road, there's a Quest 4 that's even a bigger product, right? Kind of like, PlayStation gets bigger over time and those sorts of things, right? Like Xbox gets more popular over time. So when I look at it from that standpoint, I see the potentials that losses could come down in future years. And if that happens, then people stop looking at this as just this is throwing $1 billion+ away a month, because that's the way people are looking at it right now. So nonetheless, if anything, there's upside potential from that standpoint versus downside potential, right? Because imagine if Meta just goes from losing $1 billion+ a month on this business to what if they just lose $500 million a month on Metaverse? Oh my gosh! Now we're talking about billions of dollars of extra money straight down the bottom line. Right? Now imagine if someday they make a profit from Metaverse. So that's where things get really, really intriguing here in the Meta story that is just forgotten about. And if you're thinking about what could get this stock from $500 to $1,000, that's something that matters significantly. This stock can probably climb to 500 without the Metaverse even being approved out model or anything like that. But if you're talking about that next massive kind of 2x from there, from 500 to 1,000, That's where metaverse could get real interesting.
Associated with Reality Labs, and various analysts have been adding up these numbers, the billions of dollars in losses. Do you think there's an opportunity to start?
Zuckerberg on the conference call, I suggest everybody listen to the conference call, right? If you're at all interested in this company. Zuckerberg is saying things on the conference call like 2 billion people wear glasses. And in the future, they're all going to be smart glasses. There's going to be no such thing, and he didn't put a timeline on it, but maybe 10, 20 years from now, as just wearing like a regular pair of glasses. They're all going to be smart glasses, right? And so he's got a very long-term vision here on different products outside of just what, Meta's going to be putting out, obviously, with Quest 3 and kind of what they got going on there. But in terms of like glasses being smart glasses and be able to do very many various advanced things that just is not even a thing in today's world, right? And I mean, imagine a situation where smart glasses are the thing, and imagine, let's say you don't even need a prescription for your glasses. Imagine you still want to wear them just for the mere fact that it's like it gives you different capabilities that just hasn't been possible in the past, right? And even look what Google put out with Google Glass a long while back, right? And that was old technology. So imagine where technology is going to be 3 years from now, 5 years from now, 7 years from now in regards to that. So Meta's working on so much underground right now that not a lot of people are even looking at or seeing, that I think is going to be really, really intriguing. And like I said, all there is potential upside from here when it comes to meta-related things in terms of metaverse, VR, AR, that whole wave. They're losing $1 billion plus a month. There's only upside from here. There's no such thing as downside for that. It's already at the trough. There's already, these analysts don't believe in it. They say it's a waste of money. So if all of a sudden you start to get a little bit over to, oh, you know what, maybe they got something here. And then you can get more and more. And it's like, oh man, maybe in a year or two they could start maybe breaking even on this business. And then all of a sudden it's like, wait a minute, could they start making a profit from this? Oh my gosh, okay.
Generating profits, whether it's near term on augmented reality or through the headsets, rather than making it such a long-term play?
Again, it is a long time horizon investment, but in addition to sort of the mission and the products that, we want to build, we're also doing this because, again, we think that there is a compelling business case here over the long run. We understand what it's like to build on other platforms, and we understand that, there are significant benefits, that accrue to having control and being a part of the construction of the next platforms. So that's really an important part of what's factoring into our thinking here, too, and why we're willing to invest this much and over such a long time period.
That, boom, okay, she just put it perfectly. Okay? Because at the end of the day, Meta's been screwed over by Apple in the biggest way possible, right? Because at the end of the day, iOS and Android run the world, right? Because in today's technology world, whoever controls really the mobile platforms is who controls all the marbles, right? And really who can control your fate. And so at the end of the day, that's Apple and that's Google, right? And Apple even more so because Apple's much more of a walled garden versus Google's a little more, let's call it helpful in my personal opinion. So nonetheless, like Meta's seen how they could be devastated and how Apple could devastate massive and millions. Apple's devastated millions of businesses by many of their decisions around what they did with data and all those sorts of things, right? They hurt businesses in a substantial way, and it's something that ends up actually hurting the economy. And so Meta's kind of seen this. They've seen all this play out, and they're like, oh man, we need to be the ones that control the next major devices. Otherwise, we're going to be in the same exact problem we're in today, where Apple can make this change and that change, and you're screwed overnight, right? And, I've seen what Apple's done to so many competitors over time. I watched what they did with Pandora back in the day. I watched what they've done with Spotify over time. I watched what they've even done to platforms like Netflix and a lot of controversial things when you really start to go down that rabbit hole, right? And Apple always tries to make themselves look like the white knight in the situation, but they're a ruthless competitor. I'll put it like that. Like Apple's a ruthless competitor, and Meta's just kind of Zuckerberg's like I'm not going to be victim to Apple and all these other guys in the future. I want to control my own fate. And Meta back when there was changes, obviously the mobile platform. Meta wasn't a big enough company. They didn't have the type of resources to try to make their own smartphones and next generation OSs for mobile devices. They weren't in that sort of position, and they paid the price for that over the past 5 to 10 years. Now they are in the type of position to make sure that doesn't happen again, right? So that's where things are going to get very, very interesting. And the problem with companies like Apple and even companies like Google is they don't have the founders around anymore. Google doesn't have their founders around. So to try to do the next major OS is going to be very difficult for Google, right? They don't have that same leadership team that they had back in 2006, 7, 8, 9, when we were starting to move to the mobile revolution. And Apple doesn't have Steve Jobs and Johnny Ive. The only reason that Apple's a relevant company today is because of Steve Jobs and Johnny Ive, right? The only reason that built into the biggest company in the world is because of those two gentlemen. And neither one of them, obviously, has anything to do with the company nowadays. And so that's where things are going to get pretty interesting in seeing how, they're able to compete with Zuckerberg on changing the next platforms.
I want to make sure to ask you about Threads. Of course, Threads is not generating revenue yet. It was used as an example of what can happen when you're operating in this year of efficiency. First, I have to ask, when do you see the potential for Threads to be a revenue generator? Can you tell us how many users Threads has on a regular basis? And what do you think of competing with Twitter now X, in this landscape?
Well, first of all, Threads is a new standalone app that we just launched earlier this month. And it's very, very early in its life cycle. So we know with consumer products for us, the playbook, really involves in the beginning, focusing on the consumer experience, building out an experience that is valuable and engaging, stabilizing and growing retention. And that's going to be a long and important journey for us to scale user growth to a point where eventually, we'll think about monetization, but that's something that's much further in the future, I'd say, years down the line. So right now we're really focused on making sure that Threads is a really solid consumer experience. There's a lot of foundational product work we need to do, but we're really excited. We think there's a lot of demand in the market for a product like this.
Well, we have so much more to talk about with you, Susan. I hope you will come back. Maybe next time we could do an interview in person. And we're grateful for you joining us in your first TV interview since taking on the role as CFO. And I'm going to send it back to Melissa.
Yeah, so overall, I liked that. I like that Meta is out there talking, and doing an interview like this because, in the past, they haven't always been the best at doing this in terms of communicating. And, they got to do things like this. It's very, very important. Even Steve Jobs back in the day would do stuff like this. He would do sit downs with folks on different financial networks and whatnot and talk about what Apple was up to and, what they were excited about and those sorts of things. So I think having that relationship there is important. And investors get to hear and kind of hear from different standpoints on what's going on out there. Because let's be honest, there's a lot of investors that aren't going to listen to the conference call I listened to last night. They're just not willing to put in that sort of work. And so sometimes, being there is very, very important. So appreciate everybody joining me as always, folks. Make sure you join my Patreon. That is going to be pinned comment down there. It's $19. You get to see the moves I'm making in the market. Get to be part of that Discord chat. It is a no-brainer. And I will be buying stocks in there tomorrow. Much love and have a great day.